Ever feel like the stock market is this big, confusing thing? Yeah, you're not alone. So today, we're going to pull back the curtain on one of its most talked about benchmarks, the Nasdaq 100. We'll get into what it is, why so many people call it a window into the future, and what that all means for you. Okay, let's get into it.
So here's the plan. We're going to start with the big why of investing. Then we'll decode what a market index actually is. After that, we'll put the Nasdaq 100 under the microscope. We'll look at what makes it special, the risks involved, how it's built, and, most importantly, how you can actually invest in the incredible companies that make it tick.
All right, first things first. Let's start with the most basic question of all. Why bother with any of this? Why not just stash your money in a savings account and call it a day?
Well, the answer is actually pretty simple, but it's incredibly powerful. Investing is the #1 tool for building wealth over the long haul. It's really the difference between letting your money just sit there and actually putting it to work for you.
You can think of it like this. Cash that's just sitting in a savings account is slowly losing its power. Why? Because of inflation. Over time, that money just buys you less and less. But investing gives your money a fighting chance to grow faster than inflation, helping you build real wealth that lasts.
And getting started? It's probably more straightforward than you think. This little 4-step guide from Nasdaq is perfect. See, it all starts with defining your goals. What's your personal why? Are you saving for retirement? A house? From that one question, every other decision starts to fall into place.
Okay, so you're watching the news, and you always hear them throwing around terms like the Dow, the S&P, and of course, the Nasdaq. Let's finally make sense of what they're really talking about when they say the word index. Think of an index as just a basket of stocks. Instead of trying to follow hundreds of different companies, an index gives you one single number, like a quick snapshot that tells you how a whole section of the market is doing. It's the fastest way to get a feel for the market's mood.
And this is super important. Not all indexes are the same, not even close. For example, the Nasdaq Composite. It's like a huge fishing net. It catches all the stocks on the exchange. But the Nasdaq 100, it's a specialist. It's a very curated, high-performance list of the top 100 players, which gives it a totally different personality.
Now that we've got the basics down, let's zoom in on the star of the show, the Nasdaq 100 itself.
Okay, here's the official definition. The two key things to lock in on are 100 of the largest and non-financial. That choice to kick out banks and investment companies, that is exactly what gives the index its laser focus on technology and innovation. It's totally by design.
I love this phrase. It just perfectly captures what this index is all about. If you think of a broader index, say the S&P 500, as a reflection of the economy we have today, then the Nasdaq 100 is more like a concentrated bet on the economy of tomorrow.
So who's actually in this exclusive club? Well, you definitely know these names. The index is absolutely dominated by these global tech giants, sometimes called the Magnificent Seven. And because they're so huge, their performance has a really big say in how the whole index moves on any given day. Investing in the companies that are literally shaping our future, it sounds exciting, right? And it is. But that focus on growth and cutting-edge tech also comes with a very specific risk profile that you absolutely have to understand.
So here it is. This is the fundamental trade-off. Over the years, the Nasdaq 100 has delivered bigger returns than the wider market. But the price you pay for that potential is a much bumpier ride. Volatility just means the price swings, both up and down, can be a lot more dramatic.
And you can see that trade-off so clearly right here. An index like the S&P 500 is over there on the left. You're looking at moderate returns and moderate risk. The Nasdaq 100, on the other hand, it's playing a different game. It's aiming for higher rewards, and that comes with higher volatility. It's not better, it's not worse, it's just a different tool for a different kind of investor.
Okay, this all sounds pretty cool, but how does this thing actually get built? How does a company make it, and how do they decide who gets the most weight? Let's peek behind the curtain.
It all starts with this number, 100. But how are they picked? Well, the main factor is size. The index is built from the 100 largest non-financial companies on the Nasdaq, and they're ranked by their market capitalization, which is just a fancy way of saying the total value of all their stock.
But it's not just about being big. There are some very strict, transparent rules to get in the door. A company has to be listed only on Nasdaq, it can't be a financial firm, and it has to have been around for a bit with a lot of trading activity. All of this makes sure the index is full of stable, established leaders.
Now this part is really smart. The index is what's called modified market cap weighted. See, without that little modification, giants like Apple or Microsoft could get so big they'd basically be the index. This modification is a set of rules that trims their influence every so often to make sure the index truly reflects 100 companies, not just a couple of behemoths at the top.
So this is all great information, but what's the bottom line? How do you actually do anything with it? How can a regular person get access to this powerful group of companies?
This little table tells a really cool story. You can see everyday investors are in there, buying and selling individual stocks like Nvidia and Tesla. But look at that last one, QQQ. It often has massive trading volume. Why? Because it's not one stock. It's a way to buy the entire Nasdaq 100 in a single shot.
And the way you do that is with an ETF, which stands for Exchange Traded Fund. An ETF is basically a fund that owns all 100 stocks for you. But the magic is, this whole basket trades on the stock market just like a single share of stock. So you get instant diversification with one simple click.
And when it comes to the Nasdaq 100, the most popular and one of the most heavily traded ETFs in the entire world is the Invesco QQQ Trust. But pretty much everyone just knows it by its ticker symbol, QQQ. For millions of people, this is the way to invest in these 100 companies.
So what's the big takeaway here? The Nasdaq 100 really isn't just a list of stocks. It's a concentrated bet on the companies that are actively building our future, from AI to biotech and everything in between. It really leaves you with a big question. When you invest in this index, are you just buying stocks, or are you actually placing a bet on the future of human ingenuity itself?